What is going on, YouTube? I'm Mike with Penner Investments, and today I'm going to discuss a couple of trades I entered this past week. Please be sure to hit the like button, share this video so others may learn, and subscribe to my channel so you do not miss out on future content. All right, let's dive in. On Monday, I purchased two QQQ call options with a strike price of $265 and an expiration date of December 30th. This cost $5,633. Remember, a call option represents the option to purchase 100 shares of the underlying for the strike price at any time before the expiration date. When the stock or ETF in this case goes up, the option value goes up. I like to purchase call options when I believe a stock or ETF is going to go up, as this allows me to leverage my investment as compared to just purchasing shares of the stock. The QQQ pulled back on Monday and the trend had been up, so I thought this was an excellent time to jump into this trade. All right, here's just a little bit of what I like to look at before I go into these trades on the QQQ. I'd looked over the monthly chart, and I'd seen after the CPI data had came out that the trend was upward. Then I come over here to the 5-day, 5-minute chart. And when we're looking over here at the 5-day, 5-minute chart, we'll come over here to the 14th. And we can see that the trend is still going upward here. And we can see the longer term trend, 233-day moving average is moving up, as well as the 55-day and the 21-day. And right here is Monday, where we had that pullback. And when we had this pullback here is when I got into the trade. And then the very next morning when the market opened, it popped up here, and that's when I exited the trade. Each of these trades I try to capture the movement within a few weeks and then get out of the trade. To my surprise, the very next day, the QQQ popped up from $285.30 from Monday to $292 the next day. My QQQ call option spiked to $6,278, resulting in a quick $645 profit, which was 11.5% profit, so I just go ahead and closed it out. Why close it out so quickly? Because there was a nice profit, and I've noticed when I'm greedy and try to wait for the extra dollar is when the trade turns against me. So there was a nice profit, so I took it and exited the trade. Now it's time to move on to the next. Buying a call or put option are great ways to invest when you're expecting the market to move in a certain direction. As of the other week, when the CPI data came in better than expected, this signaled that inflation was coming down, but coming down very slowly. Still was a positive light on the market, and the trend for the past week or so has been trending up ever since this data was released. I do believe we still have a ways to go before the all clear signal, but the December 13th CPI data, along with the Federal Reserve press conference on the 14th, will be a big deciding factor. I believe we will continue trending up, maybe a few pullbacks here and there, all the way up to the 13th and 14th when the CPI data is released and the Fed press conference the following day. And I think this will determine where we go from here on out. Another trade I entered on just this past Thursday, 11/17, was a credit spread to bring in some cash. As I mentioned before in one of the other videos, these are great for smaller accounts, as you can select how many contracts you want to trade, and you can also use these for medium and larger size accounts. You can trade all the way up from one contract to however many you can afford to hold. And what I like about this, my maximum risk in the trade is defined. What I did here is I sold 10 Nvidia $150 strike puts for $413 that expired just this past Friday, which was the next day I entered the trade on Thursday. Then I also bought 10 Nvidia 145 strike puts for $126, and this gave me a credit of $287. Because I collected $413 and then had to pay $126 for the 145 strike puts. The credit spread has a $5 spread, which limits my downside risk to $500 per contract less the premium collected. The $5 spread here is the 150 strike to the 145 strike, which gives us the $5 spread. And remember, with options, everything is multiplied by 100, so that makes the risk for each one of these contracts $500, and then you should, of course, subtract the premium that you collected And then this gave my total risk for this trade to $4,713 since I did 10 of these. With Nvidia hanging around $157 at the time of the trade, I feel confident that the stock will not go down all the way to $150. Just this past Friday, it ended up closing at $154 for the week, which was above my $150 strike, so this was a winning trade for me. I like the fact that this trade, I was only in it for just over a day since I entered this on Thursday and expired on Friday. All right, looking at Nvidia, we can see it was in a downtrend, and then it was kind of consolidating here around the 52 mark today, and then came back up to the $154 mark. I entered this trade right around when it was at 157. I was kind of surprised to see it pull back this far, as I thought, all the selling was done through in here. But either case, it did stay above my $150 strike, and then it did close the day at $154. Well, as always, good luck trading. If there's ever anything you'd like me to discuss further, please drop a comment in the comment section below.